Thank you very much for being with us this evening for our exclusive international webinar on the OECD's work around blockchain, fintech, and the impact of COVID-19 on financial services with Caroline Malcolm, Global Blockchain Policy Center at the OECD, and Nasir Subari, CEO of The Loft. Nasir, please, the screen is yours.
Okay, and thank you from me to everyone that's attending this call. And we're very glad to have Caroline Malcolm here with us from the OECD. Nice to see you again, Caroline.
Good to see you, Nasir. Thanks very much for the invite.
No, it's fantastic that you could spare the time. Let me just give a quick introduction to Caroline so we set the foundation and then we'll get going. So Caroline Malcolm heads the OECD's work on blockchain, assessing its policy implications and building solutions to ensure governments across the world can access and respond to the opportunities and challenges it raises. In this capacity, she has also developed a training program for policymakers on DLT, leads an advisory board of 100 global blockchain experts, and coordinates a network of project managers across the OECD relating to blockchain in topics as diverse as competition policy, SMEs, the environment, data privacy, and the sustainable development goals. Caroline was the co-chair of the Financial Stability Board's 2019 workstream on decentralized fintech and currently sits on the OECD Staff Review Board. Since 2017, Caroline is a visiting lecturer at Paris Créteil University. Oh, my French is terrible, Caroline. You have to excuse me. Did I pronounce that correctly or not?
Close enough, close enough. We know where we are.
I know the next one, though, and more recently, King's College London. That one I know very well. Okay. And Caroline was named a young global leader by the World Economic Forum. Caroline, congratulations. And again, thank you for having us with us. So I think it's good to set maybe a foundation here, Caroline. Maybe a quick introduction as to some of the work you're actually doing right now and why the OECD is involved in looking at blockchain and generally.
Sure. Happy to do that. So I might start by kind of stepping back. The Blockchain Policy Center itself is relatively new at the OECD, so been in existence since the end of 2018. But our work on DLT and its policy implications dates back. I think the first piece we published was in 2014. And really, I guess, as most people do, we started by looking at cryptocurrencies as we know them, and their implications for financial markets. Between then and 2017, there wasn't a huge amount of work that we were doing, but then suddenly, as the OECD began a project known as Going Digital, which looked at digitalization generally across the policy spectrum, we really began to develop a more solid base of work, and it was kind of beginning to understand a little bit more about this technology, what made it special, and why we should be paying particular attention to it. That our members decided at the end of 2018 to establish the Global Blockchain Policy Center, which was part of the second phase of Going Digital, where we look on one hand at blockchain under the center, and on the other hand on artificial intelligence under the AI Observatory that's just been established at the OECD this year as well. So it was really kind of this, starting from digitalization generally to really focusing on two technologies that our members felt were really quite important for the policy landscape. And so that was the creation of the Blockchain Policy Center, and we work, we're based in the OECD's Directorate for Financial and Enterprise Affairs, but we work across all of the policy areas of the OECD. So and for those of you who aren't familiar with what the OECD actually is, just very briefly, our tagline is "We create better policies for better lives." And what that actually means is that we're an international organization and standard setting body. We have 37 member countries, including most of the EU member states. And our most recent member who joined was Colombia. And we really developed evidence-based international standards and policies, so really advice for governments and research into policy developments across areas as diverse as, economics, trade, tax, development, health, business, obviously. And I mention all of those because that also explains the breadth of the work that we do when it comes to blockchain.
No, thank you, Caroline. Clearly, obviously, you engage and interact as a core with governments around the world. There are obviously other bodies that also do this in various forms, the IMF. And as we've talked about before, many people are putting together guidelines and recommendations around blockchain. But you talked about the timeline. Why now? There's still a little bit of reticence, right? At governmental level around blockchain and its potential value. What sort of feedback are you receiving, and how are you pushing through with all this?
Yeah, no, I think that's a very fair comment, Nazir, and it actually is why, although core OECD work is really focused on policy research and development of guidance, a really big part of what we actually do at the Blockchain Policy Centre is capacity building, so education about, and sometimes at a very basic level, which is where we really started out 2 years ago, is sort of what is blockchain, and why is it different, and why do I, as a policymaker, need to be paying attention? What we're really clear about doing, though, is it's not about promoting the technology per se. It's not about saying, you should definitely be using this technology. You should be definitely, but it's about saying, look, this is something which is, it's actually happening, first of all. So getting people to understand that this is not something that we're talking about in the future. This is something which is really happening right now, and they need to be paying attention to it. And it's not just in the financial services sector, though. I'm glad we're going to focus on that today, but that there are applications in the real world which are happening and which do have some fundamental differences, and particularly thinking here about the decentralized nature of governance that we see. I mean, obviously, particularly in permissionless systems, but also the way it facilitates consortia arrangements, for example, which has lots of implications for policymakers, even if it's just a question of, who, if you're running a network, who's actually liable for what happens on that network, but everything also through to things like competition policy. How do we actually monitor competition and antitrust implications of these different arrangements if we as a regulator, as a policymaker, can't necessarily see into the network? So helping them understand what the implications were for them is a really important part of our job, and it's why we actually created a training program specifically for OECD staff and our member countries to help them understand what that actually looks like. And it's been very successful. There's actually been a huge take-up rate, but certainly a huge part of our work to date has been on that education component. And we're starting to see people move forward to sort of be able to ask more nuanced questions, reflecting a kind of a beginning of an understanding of, okay, so this is what this might mean for my space. And I think that's where we'll see the work go now in the next couple of years.
That's great. I mean, but from my perspective, I mean, you have a broader perspective on this. One of the dichotomies and issues we're seeing right now is this really nailing down the value proposition around blockchain relative to the potential and large-scale cost of infrastructure change that needs to occur to implement DLT-type solutions. Is this something that you're seeing as well across the governmental nation level? And I mean, what other challenges do you see is happening? Because, I mean, as you say, blockchain has been around now for a while, and everyone's been hyping it, so to speak, and still very little has really happened.
Yes, and I actually really appreciate hearing that comment coming from you, because it's so important that we don't overpromise with this technology, and certainly because of some of those initial costs which are involved in setting up such a fundamentally different system, the benefits that you have to gain, the time frame that those benefits have to be achieved in, really have to be considered in terms of whether this is in fact a sensible investment, obviously both commercially, but also when you're thinking about governments working in this space, because governments really have two roles here. One, they're obviously the policymaker and regulator of how blockchain or DLT-based applications are being implemented and what it means for sort of economy and society. But they also have a role as developer of services themselves, so public services and delivery of those, and exploring whether they can use DLT to achieve those more efficiently. And this question around, we've heard about blockchain for a while now. Why aren't I seeing more of my projects? And what is the challenge from moving from proof of concept and pilot through to full-scale implementation? And that's something we will actually have. We have a piece coming out next month, actually, on the factors for success and failure of DLT in the public administration space, because we did get, we were starting to get a lot of that feedback about, okay, well, talking about this thing for a while now, and I've heard a lot about it. Look, and part of the problem is the extreme kind of amount of hype that's in this space. Secondly, I think is the very early stage of development of the technology. Yes, it's been around for 10 years, but really in the scheme of things, that's not a very long time. So I really like to think about it's not necessarily for tomorrow. We need to look, further out 10 years. And at the moment, we really just need to kind of understand where those developments are happening. And then I think there's issues with the technology itself. And then fourthly, though, and I think about this, we just published a piece on remittances and the use of DLT to improve efficiencies and so forth in the remittance space. And when you look at the challenges about, you look at the areas where it could contribute, whether it be in terms of actual kind of peer-to-peer transactions using cryptocurrencies, stable coins, DLT for sort of clearing and settlement, or using DLT for KYC requirements, for example. When you kind of look at the challenges between, okay, that's the opportunity, but why is it happening? A lot of the challenges actually go beyond the technology itself. So the challenges which exist, with the existing remittance framework, which can't necessarily be solved by this technology. So I think some working out what makes a good environment for the adoption of the technology is quite important.
Yeah, and I completely agree with you on that. I think a lot of the challenges are simple business challenges more than anything, and kind of nicely leads into the financial services sector in particular. I mean, there's a lot of potential use cases that are spoken about within financial services. You just talked about remittances. But again, nothing is particularly happening fast. The banks seem to be relatively standoffish at the moment, maybe one or two doing a few things. And now I'm going to lead this into COVID as well, actually. But isn't there just a broad challenge with banking, particularly, say, for example, in Europe, where banks aren't really in a particularly healthy position overall? Most of them are around 6% return on equity. Their cost base continues to enlarge, principally due to additional compliance. Now COVID-19 has hit. Some of the banks, particularly say the Italian banks, have disastrous non-performing loan portfolios, and the only impact post-COVID is going to be that's going to get worse. Is financial services, traditional financial services, in a position to want to invest in blockchain given the large-scale costs? I mean, this is a question that is playing on my mind. Are we going to actually see anything happen with blockchain in the next 5 years, given the position of that financial services? I mean, what kind of things are you seeing around this?
Yeah, no, I think that's a fair concern to have, and I think some of the some of the interesting projects that we're seeing are perhaps the ones more on the back end, not necessarily those which will affect the consumer experience. And I won't necessarily be saying, oh look, I sent this payment and it went from euros into crypto into dollars and so forth. I'm not sure that's necessarily what we're seeing, but there are some interesting, I think, projects around perhaps, I mean, obviously the sort of clearing and settlement aspects, but also some of the more, some of the consortia approaches to KYC. I mean, I think there are challenges there to overcome in terms of, information sharing and so forth. And perhaps governments have a role to play there in terms of, incentivizing improved outcomes there, even where it will mean, the need for sharing of information. But I think, that there's, and I'm recalling that one of JP Morgan's, kind of, when it first sort of entered this space, it was very much about the JP Morgan coin, and that got a lot of attention. But I think, they're actually working on probably a more far-reaching project now, and they've started to sign up a number of European banks as well, kind of on an interbank information exchange network. And I think some of those more back-office processes might be more ripe for innovation in the coming years, and perhaps some of the things we might have thought were going to be first to the starting line.
I mean, you're dealing. Having been part of some of the meetings that you've held, you're dealing with a wide breadth of different countries and get a huge oversight as to what initiatives are going on. Aside from maybe some of the obvious ones like in China, I think are investing a lot in blockchain and upgrading infrastructure. I get the sense the UAE also is doing a lot, but maybe just because it's kind of cool to be seen to do blockchain. What other countries or you see particular appealing? Who do you think is charging ahead at the moment?
Yeah, no, I mean, look, there are so many different approaches. I mean, we can talk about those, for example, that have kind of made a concerted national level approach, where countries like Germany, who kind of came out at the end of last year with a national blockchain strategy and have started to follow that quite systematically. France, developing its own strategy at the moment. It's had a number of meetings of its national blockchain task force, and I think we're going to see something out, something preliminary out from that towards the end of this year, and hopefully something more final early next year. You know, dealing with COVID preparations, kind of subject to those. Australia and itself has a roadmap on DLT at the national level, and they're really starting to move there. So I think you are seeing sort of individual countries, and then you also have some where you don't necessarily have a national kind of led top-down approach, like those countries I've mentioned, and of course China, as you said, and even India has already released the first part of its two-part strategy on national blockchain adoption. But you see some other countries where you've got small projects, you know, whether it be, you know, public procurement in Colombia, the Central Bank of Brazil looking at some things, and these are things that go beyond, you know, the sort of central bank digital currency, which is on everybody's mind, of course, but just some more, you know, I don't want to say less ambitious, but perhaps less flashy projects, which I think are kind of like on the slow burn. But it's probably, I think, you know, those are the kind of some of the more interesting solutions and more likely to have an immediate practical effect than perhaps, you know, the kind of the strategy. But these are just different approaches, and they really depend a lot on a whole bunch of factors as to which one's the right one for a particular country.
Yeah. I mean, again, just to bring it up, given COVID-19 probably, well, we know is already putting more emphasis on this issue, but I mean, most governments, particularly in the European Union, hold core to their values employment and ensuring high levels of employment. Now with sort of new technologies, digitalization, and blockchain included, do you think that there's a level of resistance to change and adoption due to the potential for increasing unemployment, be it that it would likely be in the short term? Do you think people are worried about that?
Yeah, and I think it's a very interesting point, and we've been having quite a number of discussions at the OECD about sort of tech innovation more broadly, and not specifically on DLT, and really thinking about, you know, there's some interesting ideas at the moment about, you know, what has been the generator of a lot of innovation in the world. And if we have a look, you know, whether it be DARPA in the US or similar projects here in Europe, that the driver is, you know, ministries of defense. What are they trying to do? They're trying to reduce humans' engagement at the front line. But those technologies then have a flow-on effect into society more broadly. But at their genesis, they're looking at reducing human engagement. What about if we thought about and conceived of innovation differently as extending human capacity, for example, rather than replacing humans? And I think I sort of hopeful, I guess, that different mindset, but that requires, you know, kind of some structural changes in terms of how you think about how innovation is supported. But I don't necessarily think innovation has to mean fewer jobs for everybody. I do think that there are options there.
Yeah, no, and I don't know if we've talked about this before, but there's a very interesting study out of Boston University by a professor called James Besson, who looked at automation across all US industries from the 1880s, automation in today's word being akin to digitalization.
Yeah.
And what he found and it was unanimous across all industries, the automation in the short term does lead to job losses, but in the medium to long term leads to increased capacity and therefore more people employed in the sector. Yeah. One of the interesting and most pertinent example given financial services context was the introduction of ATMs into the US market in the 1970s.
Yeah.
Everyone thought that would mean that all the bank tellers would lose their jobs. There are now more bank tellers in the US than ever before in history. They just do something different, right? Yeah. I look at it also like our mobile phones. I don't know about you, Caroline. I don't remember anyone's telephone number anymore. Do you?
No,
I rely on
absolutely
the
not.
phone
Absolutely not.
so it's exactly what we pitch out, is that automation, be it that there may be some disruption in the short term, ultimately leads to greater productivity and capacity and therefore growth, right?
Yeah, but I think that's also part of the challenge is, you know, we can talk about these short-term, long-term in a very generic sense, but at the heart of it, these are individuals. And how do you accompany those individuals, that individual who is at the receiving end of that productivity push, and help them get ready, and without making them a sort of, you know, a lost generation or a lost, you know, part of our society. And that's a huge challenge that, you know, I mean, goes beyond, I guess, the remit of ours today, but certainly, yeah, it's certainly a massive challenge for governments, accompanying people through that.
Whose responsibility should that be? The government or the company?
I think, look, it's not my area of expertise, right? I don't want to wade into.
Just having a chit chat with you, Caroline.
But look,
big policy making decisions and recommendations here. But it is interesting because what I see quite often is governments saying it's the company's responsibility, companies saying no, it's the government's responsibility. But ultimately, I think the responsibility goes all the way down to schooling as well. The schooling isn't necessarily fit for purpose anymore, as far as I'm concerned. So.
No, and it's very interesting. You even, I mean, here in France, you see the private sector stepping in because they don't have necessarily enough people with the right skills, so they're developing sort of tech schools, basically, to meet the demand that they have for people with that right skill set. But whether it's those same people who might be losing their jobs is a different question.
Yeah, I mean, going back to blockchain, which we should be. I mean, as I say, you're working to provide policy framework recommendations and guidelines on a macro level to your members, to governments globally. You mentioned a couple of countries, and Germany, France, and others, and Australia, that are working on their blockchain strategy. I mean, is it slightly frustrating, maybe, that countries are individualizing this strategy and almost see it as a competition rather than sort of working and collaborating together, given the nature of what blockchain is?
Yeah, look, I think it's a little bit the nature of the beast organization of nation states, but without delving too much into those politics issue. Look, I think that at the end of the day, there is often a reason for countries taking different approaches, and they're adopting it both to their national circumstances, to their cultures, to their values. And so I don't think it's necessarily, so no, it doesn't sort of bother me that countries are taking their own approaches. I think that's quite sensible. They have different economies, they have different needs, and they want different things out of sort of innovation. I think what we need to think about is at the point where you have those cross-border implications. And I think the first step is simply to understand where those points are that you have cross-border implications. And I can perhaps give a concrete example is we've begun some work on the tax treatment of cryptocurrencies. So surveying, and we have, although the OECD itself has 37 members, some parts of our work engage with a broader group of countries. And in the tax area, we have about 130 odd countries, jurisdictions, who take part in our inclusive framework. They have, through a survey, undertaken, analysis of how countries treat cryptocurrencies for tax purposes differently. And so first step is really just that taking account. So how do different countries, deal with these issues differently? Then identifying what those points of kind of cross-border overlap are. And then thinking about, well, do you need not necessarily harmonization, but at least a coherency of approach, so that you are facilitating trade and exchanges and so forth, and to the greatest possible extent. And then think about, well, what are the options if that is the goal, greater coherency? What are the options to achieve that? And there might be multiple different options, and we've seen that in different parts of the OECD work. Achieving a particular goal doesn't mean we all have to follow the same system. And I know certainly there is that flexibility. If I think about the EU directive process as well, you need to all get to here. How you get there is a question for you.
Yeah, no, and I'm glad to hear that. I mean, I would draw a little parallel. I mean, with GDPR and privacy rules around data, right? So Europe at least have come together as they should do, given our purpose with the EC and the European Union, to create a common policy. The problem seems to be arising that other countries are now on their national level creating slightly distinct policies, which therefore, as you say, has potential repercussions on that international collaboration and some efficiencies actually that potentially could be destroyed due to that could be taken out of technology but could be destroyed or negated, such as cloud computing, for example, right? And blockchain and cloud computing likewise do have some there and jigsaw pieces around this as how it all maps together. Listen, I think we've got so many questions coming in. I think this would be a fantastic opportunity to ask a question, to get somebody in to ask a question. So top of the list, he was right in there. We have Dr. James Mully, who's the Academic Dean from the European Business University of Luxembourg. So Anthony, I will let you do the honors of bringing people live and coordinating. So can we have James Mully live, Anthony?
Yes, 1 second. 1 second. James, please go ahead.
Thank you so much, and I will be right to the point. First of all, thank you all. Excellent discussion and excellent questions that have been raised so far on both sides. My question is really on the OECD's view on second and third generation blockchains, especially when it comes to, the evolving nature and the very fast moving pace that, this whole space is taking. We're talking about blockchain and Bitcoin. That's old school, right? So that's my first question to you, Caroline. And then I just wanted to touch on very quickly, this is my last question and I'm gone. Sorry about that. But the People's Bank of China, you do mention central bank digital currencies. Is their move and the speed in which they're moving in this domain, is this something of concern? Are you also somehow behind ensuring that the public is aware, alert? Because again, we don't want them to come and eat our lunch, right? Thank you.
Thanks, James. Shall I jump in, Nazir, or will we hear other questions first? How do you want to handle it?
No. Why don't you? We'll take it question by question, and I would also, if you don't mind, like to comment on that China question, because I know the architect of the central bank digital currency. I sit on the IMF steering committee with him, so I can
Okay.
But carry on anyway.
Yeah, no. Look. I think more than anything, China on that second question first, China's been talking about this since I think 2014, and look, there's no question. I think that for central banks around the world, the Libra initiative accelerated their thinking from theory into practical quite rapidly. Specifically there, look, I think what's interesting, and I think this is really a question that a lot of central banks are facing, is that, you're proposing a model which, and we should say, I guess, straight up that its exact components are still being developed, is my understanding, and even the question of whether it will ultimately have a blockchain or a DLT component is still under consideration. But it's called the DCEP, so it's got this both digital currency, electronic payment aspect. And if we think about the Chinese market in particular, you are looking at a market where you have very efficient existing solutions for electronic payments. And so really thinking about, well, what is the value add? What is the role of a digital currency that isn't already being met by the existing payment systems? And these might be efficiency, it might be around information and data collection and so forth. But I think it is certainly one of the questions that is on policymakers at central banks across the world, and not specific to China. In terms of the speed of their movement, certainly they seem to have moved quite quickly, but at the moment the timetable for next steps is certainly unclear as to when they'll move that forward. And there are other countries who are already piloting this, in the region, in that region, you've got Thailand and Cambodia already going ahead with projects that they're pilot testing in a retail and wholesale capacity, central bank digital currency. So I know China gets all the news, but they're certainly not the only one out there at that point of being able to deliver. And then, you know, in our OECD member countries, you know, it's a much more, you've got much more, I guess, in many cases, mature banking systems and mature arrangements between central banks and commercial banks. And I think those factors, you know, bring a certain uniqueness as to why their considerations will be different from other environments. On the OECD view, second, third generation blockchains, absolutely. I mean, for us, it's not even so much about, you know, looking at, you know, at any one particular type of blockchain, but merely helping our members understand like how those developments, and you know, we use these terms interchangeably, blockchain and DLT, but you know, helping them understand those evolutions in the model and again, what it really means for them. So no, I certainly take the point, James, that you know, there are developments happening and that we need to stay abreast of those. And we also need to, and that's part of the fact that we're trying to think about policy issues in an industry which still very much at an early innovation and adoption stage. So there's a lot of developments happening. So it's a matter of kind of not wanting to put too many, I guess, barriers in place to that innovation, but also have some sort of guardrails so that innovation happens in a way that, you know, is consistent with broader policy objectives that governments are trying to achieve.
If I could then just add as well to the People's Bank of China question, I sit on the IMF steering committee. Mu Cheng, who is the architect and project owner of the central bank digital currency project at the People's Bank of China. We had a very good chat actually at the last IMF meeting last November, where there was a debate raging around central bank digital currency adoption between the blockchain enthusiasts and everyone else. Basically, what is the cost of implementing and who bears the cost of implementing a central bank digital currency? I mean, in the current model of money, governments bear the cost for printing money and distribution of cash, particularly. If you move to a whole-scale central bank digital currency, the government really has no cost. But the problem is, how do you ensure whole-scale, particularly in the retail sphere, whole-scale acceptance and the ability to transfer central bank digital currencies? Who bears the cost of that infrastructure, i.e. POS devices, whatever it may be, in order for this to occur? The blockchain enthusiasts were saying there is no cost, you can do it via mobile, but we were making the point that no, you can't really in a business context. There has to be some sophisticated architecture around it. And what was interesting was that Mu Changchung said that the reason that China has slowed down its project is specifically around that issue, that they believe that there is quite a significant cost transfer from government to the market by implementing central bank digital currency, and that they're trying to sort of put their head around the fairness of being able to do that. So things have slowed down a little bit around that project in itself. Thank you for that question, James. I hope that was reasonable answers. Let's move to Jason Chua, who came in second. We're doing this in order. Anthony, could we get Jason on?
Unfortunately, he cannot be found in the chats, but maybe we can read his question. He's Assistant Director of the Monetary Authority of Singapore. Let's see, if you don't mind reading the question, that would be great.
Okay, so we did have somebody from Singapore on, that's very interesting. It seems, so this is the question, Caroline. It seems clear that the OECD has identified various fields of activity where DLT is especially relevant. Are there any areas which are on top of the OECD agenda at present, and why?
Good question. Look, I think probably the two front runners where we see the most activity is financial services, but also supply chain management. I mean, you know, it's not just COVID and the failures in our supply chains, not just in terms of, you know, of the idea of global value chains and whether they're as resilient as we'd hope they would be, but also understanding that it's not just a question about kind of location, but I think many of us were surprised that we didn't have a stronger grasp on how those supply chains worked and what was actually involved in moving things, and do we really have the transparency that we would expect? And so there's that kind of movement of goods from A to B angle, but the other aspect, I think, and COVID again has just given us an illustration, and it's just top of mind. So is a question around, forgeries, fake products, whether that be, fake news. And we've seen some interesting projects coming out in that from Italy, but also recently the New York Times, which are looking at using a blockchain-based system with respect to sort of photography and showing the origin of those. But also in terms of, whether it be medical masks, are they the masks that you thought that you bought, the ones that you actually being delivered, for example? So I think those two areas are certainly areas where we see a lot of, I guess, fast-moving developments. And so when I say supply chains, it's in all different sorts of sectors, whether it's food, mining, fashion, and so forth. There's really quite a lot of projects in that space. And I think perhaps stepping back, there are some cross-cutting issues which, regardless of whether the particular application of the technology, are coming up. And here I'm talking about, digital identity, issues around business models relating to decentralized systems. I mean, that was a really nice example, kind of insight that you shared, Nazir, in terms of where China's at, and thinking about, well, okay, so, who pays for this in this new world? So, and how does that shift things? And who are those new players that are going to bear that cost? And is that a shifting of the cost burden that we accept? And that's true, far beyond central bank digital currencies, but, I think some of those new business models are being explored. When you have things like the Brave tokens for searching online, or you have social media platforms, like the one that Block One has created, Voice. What are those new business models, and how do you actually make that work economically? And that comes also the question of what are we as consumers willing to pay for? And so I think just those kind of two areas, finance, supply chains, and then, as I said, some of these more cross-cutting issues like digital ID, decentralized governance, and decentralized business models are things where we see kind of the most interest at the moment.
Thank you, Caroline. And we have our regular webinar listener, Dan Fahini, who has a question, as he always does. Welcome again, Dan. Please ask your question.
Go ahead, Dan.
You need to unmute, Dan.
Okay. I had a browser war between Microsoft Edge and Google Chrome, so I had to go to my backup mobile phone. So hopefully you can hear me. Question, the convergence of IoT, AI, and blockchain, really to match the physical with the digital, to have real-time censoring of let's say, non-people connected sensors, and also the power of the blockchain and DLT. I think that the three should work together to solve these supply chain management issues. I've spent a lot of time looking at the bank issues and the insurance issues. It seems the nut to crack, though, is in old legacy logistic freight forwarder type companies. So your thoughts? Thanks very much, Caroline.
Thanks, Dan. It's a good question, and I think it's an area that we've touched upon a little bit in the work that we've done, but I think certainly deserves a lot more exploration. One issue, particularly in the area of supply chain management, is that we have also, as well as the track and trace of goods, we'll try to look at some of the qualitative aspects of supply chains in terms of, how do you, are you using child labor, slave labor in your supply chain? What are the working conditions, so on and so forth. But the challenge there, and I think this is a challenge, again, this comes back to this is a challenge not specific to blockchain, but it's the garbage in, garbage out problem. So can IoT, for example, it's almost ironic in a sense, and I'm not sure what it says about us more broadly, that we would trust the machine more than we would trust human input into these systems. But can we use some of these technologies to kind of overcome the challenges of the quality of information, which are true. Look, they're true in database systems generally, but they're particularly, I think, pertinent in DLT systems because you do have that kind of immutability. Once you're in the chain, we sort of try and take that as the oracle of truth. But unless we really trust the source at the beginning, then we do have an issue there. So I think it is an area probably worthy of a lot more exploration. We've touched upon it, and as I said, particularly in our supply chain work, but I think there's a lot more opportunity there.
Thank you, Caroline. Let's have a couple more questions, I think, in terms of time. If that's all right with you, Caroline, you have a bit more time? Yes?
Absolutely.
All right, fantastic. All right, so let's move on then to, again, in order, Bernard Nicolai. Bernard, can we have you live? There we go.
Hello? Hello?
We can hear you, Bernard.
Okay, good evening. Thank you for the presentation. So my question is, why are some governments and nations interested in launching their own cryptocurrencies, and what would be, at the end of the day, the advantages of such cryptocurrencies according to the different projects that you are aware of? Thank you.
Yeah, look, it's a good question, but particularly if if we're thinking about systems where, the banking system might not be perfect, no system is, but it's working relatively well, and there's, efficiencies are quite strong. I guess there's a couple of different considerations. One is really the competition aspect. So if you have a private sector player, and I think we all know who we're talking about here, who is going to come into the market with a very similar product anyway, I think you really need to be thinking about, well, if it's going to happen, then maybe I as the central bank want to be setting the kind of the lay of the land in this, rather than letting having the private sector move into something which has such important implications for the capacity of governments to deploy traditional tools of monetary policy. I think there's also another interesting part, I think, and is that we are beginning to see that some of the, I guess, greatest gains, and we've done some work around asset tokenization, for example, is that unless you, and this is true, asset tokenization, financial markets, or tax, but unless you have an efficient payment rail which can support those activities, then you're not going to get the full benefit, because you're still having to move into kind of the real world, if I can call it that, at a certain point. If you can have payment move along with the kind of digital twin, or if it's a native digital asset, move with that asset, then I think you're going to get efficiencies that you can't see in the current banking system. So I think each country has got different rationale for why they might be considering that, but that's just some of the kind of thinking that we've seen in this space.
Again, thank you very much, Caroline. Thank you, Bernard. Next question is going to be from Wim Stormans. But Wim, I'm going to ask you, I've read your question here. I'm going to ask you to rephrase it slightly, because it's a bit of a positioning question, a bit more open-ended, let's say, Wim. There's some precedents you're setting in that question, and I think we should be a little bit more objective, okay?
Do I leave it to you to rephrase it?
If you know what I'm saying,
Yeah.
Words in people's mouths here.
Yeah. First of all, Caroline and Azir, thanks for sharing your critical minds and your insights. It's always interesting to hear you share your insights and thoughts. Question: how much, and it's a little bit complementary to the previous question, how much are governments looking at blockchain as potentially a long-term menace to the banking system?
I like the way you rephrase that, Wim. That's a good question. That's more open.
Thank you.
Well thought through. I'm sorry to put you on the spot, but it was a little bit directional, that one. But that one's fine, Caroline. Go ahead.
I didn't read the original version of the question, Wim, so I appreciate this question, however. Look, I think that, a long-term threat. Innovation, I guess, has been part of banking since kind of banking was created. So I think that there's almost an expectation that banking systems will evolve, and I think we've already seen that to smaller perhaps what seemed perhaps a seismic effect at the time, but things like open banking, so and the emergence of fintechs and financial institutions which weren't perhaps traditional deposit taking institutions but were offering other sorts of financial services. So I think there's already been a fair bit of disruption in this space. So further disruption from DLT based systems I think is not necessarily something of specific concern, at least in in many of the things that we're seeing evolve at the moment. We're talking about greater efficiencies within existing models. that said, I think the Libra example obviously has shaken things up a little bit. But I'm not sure if I'd think of that in terms of the banking system per se. So look, I think governments are kind of watching the innovation take space, but do they see it, in terms of a threat? I think that might be going a bit far.
Thank you very much, Caroline. I'm going to apologize to everyone else because of time, but I'm going to ask the last question, Caroline. There's a thought occurred to me, and this is interesting because something again about the resistance to adoption, and it's related to the notarization function, the smart contracts, right? I mean, I've found it, having been brought up in the UK and then living in various jurisdictions, but then coming back to continental Europe, I'm flabbergasted by the power of the notary, right? Now, and they are powerful human beings, not just in terms of the role that they play, but in politics and local government. Very often, mayors of towns are notaries, etc. You know this in France; they're a huge functional area, and their potential to be made completely obsolete by blockchain is significant. I mean, I know it sounds like a small point, but do you think this is actually playing a major role? I think it could be, but I'd like to hear your view in hesitant adoption, because you wouldn't industry.
It's a fair comment, I think, and I think you've seen some of that resistance you're talking about in jurisdictions. I mean, Italy has looked at a DOT-based notarization system, and like France, like some of these code law countries rely heavily, as you say, on notaries to play a role in kind of administrative life. But that's been true when we've seen innovation in all sorts of other sectors. I mean, ride sharing, taxis. It's. I think I think the innovation will ultimately come, and I think the smart incumbents are the ones who are thinking about how either to pivot their business models or how to work with these new systems so that they can actually again extend their capacities, not be replaced by these new systems. But no, I think you're absolutely right. I mean, it's certainly prima facie seen a sector ripe for disruption by this sort of technology.
Okay. I appreciate your answer there, Caroline, and I very much appreciate talking to you. As always, it's fantastic to hear your views and insights. I think that is a good time to wrap up. I apologize, we do have a lot of questions, but we have limited time. Anthony, I think I will let you close, right? And thank you again, Caroline.
Thanks, Mazid.